We may be on the verge of a default, but don't tell that to the markets because Nvidia Day is here and we are loving it. On today's show, we're going to talk about everything happening in the markets with the debt crisis. Will we default? Does it matter? All of that and more. Before we get going, please hit that like button down low, drop some comments, contribute to the conversation. We'd love to hear from you. Subscribe to our channel if you have not yet. That is greatly appreciated. Nothing that Kevin or I say is financial advice. We are not financial advisors. We're a few guys who love talking about the markets, tracking the macro, trying to place our bets, but do all of your own research before making any buys and sells. Kevin, we got the Nvidia Q1 report yesterday. Earnings came in slightly above expectations, down from last year. However, it is having an all-time great day, currently up 25% today, $77 a share, which I love. I mean, I love it. But that's on the back of increased Q2 revenue target up to 11 billion versus the expected 7.2 billion from Wall Street. So we're seeing a crazy, crazy day here. Meanwhile, when it comes to the debt ceiling, allegedly we're getting closer, but also McCarthy basically told House members they can go home for the weekend. Don't love the sound of that, but I mean, what the hell do I know? So how are you feeling on this Thursday? Welcome back to the show. It was weird doing it without you yesterday.
Oh, thanks. I'm glad to be back here. It's yeah, I mean, I feel, how can I feel? This is such a weird time in the market. Everything else looks like shit, and then Nvidia shoots up like this. It's like, well, you're making us look bad, you know? That's probably what every stock in the Nasdaq's saying right now. But it's absolutely insane how much it shot up. And again, I'm looking at the chart. You can see that we'll go into the Nvidia chart in a little bit, but that gap on the daily where it opens to where it is, I mean, it's like, come on, man. You can't pump that much. Like 25% is so massive. It's such a huge percentage when it comes to stocks in one day. One day.
Yeah, in one day for a large, like for something that has the market cap of Nvidia already going into it, like
exactly.
Just hundreds of billions just appeared out of thin air.
I love it because
as someone who's been holding Nvidia since 2011, I'm not mad about it.
Right,
you know,
yeah.
am I selling here? No, because I don't want to deal with taxes. Should I sell here? Should probably trim a little bit, but I'm not going to quite yet. And I'm just enjoying the ride. We're seeing other AI and semiconductor stocks get pulled up with it as well. AMD, Intel, bunch of others. Meanwhile, we see your darling, the DXY. And here's what makes like the DXY is going up and the VIX is going down today. And I just don't understand what I'm seeing at the moment.
I know what that is. That VIX is just a slingshot, man. I keep saying it. Just waiting for the perfect time to let go. It's going to let go and it's going to kill Goliath. Ace, what's good? It's good to have you back. I guess he was here yesterday. Maybe sure. I'm not
Ace
sure.
was here yesterday. You know, it was funny enough, Kevin. Yesterday was one of the shows that had the most concurrent streamers since we started doing it. And I have like half a voice and I'm by myself, like struggling to get through a half-hour show. And I was like, oh, please, if this is your first time, come back. It's not always like this. But it went pretty well. But yeah, it's the VIX is a slingshot. It's gonna go. It's gonna rip at some point. I looked during the show. I don't know if you watched back any of the replay yesterday, but I struggled to get myself into the right part on the charts. But I showed back in 2011. I zoomed in on like the days even. And I did, or maybe I did that today, like before the show. But you can go back and look on the daily in August of 2011 when we avoided a default, but we still saw the credit rating go down. The S&P fell 13% in 3 days. In 3 days. It was down like almost 20% over 2 weeks, but the majority of that fall happened in the first 3 days. And we could see something like that. Like I think people need to strap in because we got PCE data tomorrow morning. Okay. We have still no decision on the debt ceiling as of yet. And if we go into the weekend, like people usually go risk off heading into Memorial Day weekend anyways. But if we go into the weekend with no decision on the debt ceiling, no clear signal of when it's going to happen, that's a big problem. And that could lead to a bloody day in the markets tomorrow.
Oh yeah, 100%. And I mean, even going into say Tuesday next week, imagine how those futures are going to look. It's going to be wild. But again, even though we expect low volume going into the summer, I think the volatility is going to be extremely high. These next 3 or 4 days that of trading, at least in the markets for TradFi, and then obviously over the weekend for crypto, that could be absolutely devastating. We'll see. We haven't gotten the information yet, but I mean, the one thing I think that was probably the biggest thing for me, even bigger than Nvidia, just because I look at Nvidia, and despite the 25% increase, it's just I know what's going to happen next. But the Fitch ratings. Obviously, the U.S. has a really good chance of being downgraded from AAA to AA,
and more. Yeah. Also,
Moody's.
Morningstar also stated on Thursday after Fitch that they're looking at decreasing that rating too.
Yes, and Morningstar's big. It's also hometown Chicago company, but yeah, so it's wild to think that the U.S. I mean, obviously, I'm not surprised. Again, the closer we get to this date and we get no absolute resolution, doesn't matter if we get a resolution or not. It's going to be devastating. And we've been saying this is a buy the rumor, sell the news event. It's likely going to be that way, but this can be catastrophic. It's going to definitely be painful for the markets. I don't know how much. Obviously, S&P dropped what you said, 13% or 11% or 13% in 3 days.
13% in 3 days.
That's
back
huge.
in 2011, simply on the back of Standard & Poor's decreasing the credit rating.
Yeah, and then imagine how that's gonna. Oh, we know how Nasdaq is. Nasdaq's pumping again today. Imagine how that's going to affect that. I mean, it's not just going to be at the S&P. It's going to be.
Oh no, it's going to be everything. But that was
down
what
the
I was
market.
looking at. Yeah.
No, 100%. But there's going to be some people who are definitely going to be getting hit more than others. Nasdaq is so overbought right now. Like we'll pull up the charts too in a little bit, but the stochastic RSIs on like all the major indices and even the short time, lower time frames, absolutely insanely overbought. That just I'm scared. I'm scared to see where it ends up, but does not smell good.
No, it does not. And the latest timetable that I've seen is like if, and this is a big if, both sides come together and iron something out, they're looking at not voting on it in the House until Tuesday. Then they got to get it sent over to the Senate, and then they got to, knock the dust off of Biden and get him to sign it. And I mean, there's a ton of Social Security payments that need to be sent out on the 1st. They have to get this done.
Mm-hmm.
And if like that is so many things have to happen like perfectly for this to work out. Like what happens if people go home to their, and I heard someone brought this up. This is not my original thought, but it's a good thought that I heard. There's a real possibility that a lot of these, congressional representatives go to their home districts. They hear from people that like, we don't want you raising the debt ceiling if it means we're not cutting spending or blah, blah, blah. And they have to like listen to they need to be voted back in. So they head back to Washington. Like, no, we're not going to agree on it until this is figured out. Like there's a lot of things that could go wrong here. Mm-hmm. If like, just seems like the downside risk, and I say this all the time, right now the downside risk greatly outweighs the upside potential.
100%. And, I'm not going to tell anyone to short here because I think the move for the shorts was a lot higher, the resistances we were talking about. But I don't think that this move to the downside is far from over. And in crypto, we'll look at Bitcoin too, man. It's just like there is so much volatility that's on the way that we could potentially just see an absolute bloodbath into June. And maybe the markets cool down, right? Over the summer, majority of the sells go through where it's such a low level that people start to buy this market, but we're not seeing the market be bought up enough to the point where it's significant. And then we just see one more last sell off. And that's honestly my opinion. It's been my opinion for, I think, 2-3 months now. It's very similar to 2008. But for the time being, it's just like this chart, the fact that we're looking for a sell off in May, a sell off in like June. It's the same exact thing that we saw in 2008. It's like it's identical to the charts. There's someone doing jumping jacks upstairs. This is great. But
you know what? We appreciate you being here. I know you're on the road, so it's appreciated for sure, man. Let's get into some of the charts. I think we've covered, on the, and now I'm looking. And everything's taken just a big green candle up. This makes no sense. Anyway, we did see some economic data come out today around the jobless report. That number came in under expectations again. There was also a revision down in the number from the previous one. So We also, and this was interesting, the second revision for the revision for GDP came out and actually moved GDP up from 1.1 to 1.3 on the back of higher than previously calculated consumer spending. So GDP went up, jobless claims went down, coming in 16,000 under expectation, but that'll probably get revised. And then, like I said, tomorrow's a big day. We have personal income, personal spending, and the PCE numbers coming out.
It's kind of convenient. Again, I think 1.9% was still the expected target for GDP last time. So even though it went up 1.3, still down 0.6 percentage points of where it was supposed to be. Again, not ideal. That just shows that the economy is still slowing down. We did see a pretty strong Q1. I will not lie about that. Again, if these earnings from Nvidia or any of these other companies, show that there is some strength in the market, maybe there was still a little bit of cash moving around. Some companies saw it, some didn't. So I'm not surprised that the GDP definitely grew a little bit from maybe the last one, but it's still a huge sign that we're slowing down. And again, next Q3 and Q4 still are the ones I think we need to keep our eyes on, but let's not count out Q2 because, Q1 was excellent, but I don't know if this is going to be a sign of continuing growth. I think we're probably going to see a little bit of a downtick when we get the GDP from Q2 this year later on.
Yeah, and then lastly, before we get into, I might talk about a few more things before we get into the charts. I'm just kind of spitballing at this point, but
I'm here
the funds rate probability is now it's like 50-50. Remember, Kevin? Remember after the last meeting when no one was talking about the chance of a 25 basis point hike? Everyone said they were going to pause. The markets were pricing in 3 rate cuts, and you and I said, no, not happening.
Yep,
it's not happening. We're going to get another rate hike. And no one wanted to listen. No one wanted to believe it. There was zero probability. There was a greater chance of them cutting. And now we're at 50-50 that they're going to raise. And it's going to keep going up. And I am just vindicated right now.
One of my favorite quotes, because I was telling you I watched The Big Short on the plane yesterday, is truth is like poetry. And most people fucking hate poetry. It's the greatest line, I think, in the entire film. And I couldn't agree more. We were telling everybody, like, this is they're not going to take their foot off the gas when it comes to raising rates.
No,
and they've said it multiple times that going into 2024, we don't see a place where we're going to be cutting. Most of the Fed members said that they're most likely not going to see a pause anytime soon, right? So the fact that we're looking at this and we're betting on whether we're not going to get 25 basis points or not, now the market's not sure because there's a lot of obviously a lot of uncertainty out there. It's like all you have to do is listen to Powell. It's been pretty fucking easy the past 12 months.
Yeah, like I went through the FOMC minutes. I don't know if you rewatched the show at all yesterday, but I went through the FOMC minutes. They're expecting recession to really hit in Q4 of this year and Q1 of next year. They also stated in there that they're expecting to keep the rate hikes elevated through January.
Yeah.
So we're looking way ahead here, but you should do that. Mm-hmm. The Fed next year in Q1 meets January 31st and then March 20th. So maybe they'll cut the rates, at that. Maybe they'll ease off in January heading into, that March meeting. But man, I think we're going to see a hike in June. I think we're going to see another one in July. And I think then we'll see a pause in September, November, December. That would be, and we've been pretty damn good about this so far, Kevin. So that's what I'm betting on.
Timeline is just so funny.
Yeah.
Yeah. Thank you.
Thank you very much. But yeah, they're not going to cut this year. Can we just, and they've said it, Why are any rate hikes priced in? I don't get it.
I love the timeline, though, the fact that there's a meeting in January and March, because if we remember again, I bring up 2008 because it's so fucking, it's almost like we're just pulled this recession and we're just copying and pasting it right over here. Or maybe I should have done it this way and put it over here. I think that's where I was supposed to do it on the screen. But I'm looking at it. It's like January into March. We bottomed in March of 2009, right? And that's the point where we started seeing people buying into the market. Volume started shooting up a little bit, mainly institutional people who were smart and played the crash, the right way. They had cash on hand. They started buying in there, right? And if they're going to be cutting and then they hold it from January, maybe we see the cut in like January, March at that time. Obviously, that would be the end of the recession. And the bad thing about recessions is once you get to the recession, you realize that it's here. It's likely over. Like the worst part of it is likely over, right?
So, I said that exact same thing yesterday during the
really?
show. It's like start getting your, if we believe this timeline, because the Fed, like I'm gonna believe if I have to choose between some slapdick on the internet and what the Fed says regarding when the recession is going to be, I'm gonna listen to the Fed over the slapdick. Sorry. So
slapdick makes more noise, though.
That's true. To me, that means get cash on hand. Do your research now. Know what you want to buy, and then when we get into, Q3, Q4, when the Fed thinks that the recession is really going to hit, that's when you start buying. When you see those big red days, that I spent too much time listening to slapdicks. Randy, I get it. And now that I see your PFP, I know exactly who you are, by the way. Like at first I didn't recognize your old picture because it wasn't the pudgy, but now I remember. So good to have you. Good chatting with you. So no, like I agree. The slapdicks are very loud, but they are they're gonna be wrong. And I hope people will remember it. But really we need to move on past that and just like plan now, because the opportunity is coming later this year, whether it's Q3, Q4, on those monumentally terrible red days that we're going to have. That is the days that I will be buying. And 100%. I will be buying in anticipation of the announcement that the recession happened and it's over and the market can start to take back off again. And, that's the game plan. That's what I'm doing. That's what I've determined is the right thing for me. Everyone needs to determine what's the right thing for them. But man, it is a lot of good stuff will come in the future. We're just going to have to kind of trudge through a lot of bullshit.
Oh, definitely. I've been bearish for over a year now. Like this has been over a year of bear market for me. And I'm very happy about it because it's given me the opportunity to be in the markets at the right time, getting in and out. But the thing that's really interesting is, we're getting to a point where we're probably going to start seeing the economic collapse. However, we still have plenty of time to the point where you can maximize so much going into when the actual recession hits, right? So it gets to a point where maybe it's not profitable to be shorting the market. It's more risk on to be doing that. But the good thing is accumulating cash has no risk whatsoever from now into the point where we're at the bottom. So there's multiple ways you can play this. And I think that starting now, if you were to start, you probably should have started 5 minutes ago. But starting now is probably the next best time. So you might as well just keep that head down, just keep accumulating cash. We see how strong the dollar is right now. There's a reason why it's strong against these risk assets because people aren't certain. They're not sure if this is going to keep going on forever. And the bad thing is when we're in this period of euphoria, even though we're in a bear market, people are absolutely excited that the prices are going up for, say, Nvidia. It's like, how could anything bad ever possibly happen? And that's the worst question you could be asking yourself if you're still bullish.
Randy, I do too, but just know that 2 years from now, we'll still be doing this show. So you're stuck with us for a long time. We're not going anywhere. All right, let's look at some of the charts. Let's start with the DXY like we normally do. It has gone on a very nice run over the last week when like, Kevin, I'll give you props. You were very convicted last week when we were down like at 103, even before that. When we were down, let's see, when was it that we were like barely over 100? I'm going to pull this up. The lowest we got was back in April. Middle of April, we hit around 100.738. And you were just like, I know it's coming. I know what I see. And you were steadfast there. And I appreciate that. And boom, here we go. We're back over 104. And if we get more bad data, if we have any issues in the economy, we will see that number continue to go up.
It was right here. These aren't a pair of boobs. These are two areas that it touched off this line, and that is called support. Again, it just shows that conviction. You just gotta, if you see something in the charts and everyone else is saying something different, you have to question it. There's a lot of indicators showing that we were probably going to put in this reversal pattern here. And obviously, we bounced with the DXY. And as the DXY has climbed, we have seen risk assets obviously take a bit of a hit. The part that's really interesting, though, is how we've shot up on the daily above the 50 and the 200. This is absolutely bullish for the 50 because obviously this is going to be moving up, and the 200 is going to move a little bit slower than the 50. But if we get this 50 to cross this 200 and it stays above it, that's a golden cross. And this is lights out for the DXY going into the obviously the recession that we're anticipating. Next level of support is 105.69. Do I think that it could hit it? I think we need some type of correction. Obviously, I'm trying to be as conservative and reasonable as possible, but the problem is that when we get to these levels up here, we're obviously going to find rejection. But the good thing is maybe we find some support on the 50 because it's climbed so much, and we kind of consolidate before making the next move. I do think that we're going to go past 105.69 in the obviously in the macro. Let's take a look at the weekly. Obviously, the weekly's moving up pretty well. Just look at this, a perfect W pattern right there, a perfect reversal. But we never tested the 200, which is a good thing in my opinion, because that means that the 50 never got close enough down there. So I do think that we're going to have to climb up. If we break this 105.69, we'll probably consolidate, maybe drop a little bit, but then we're going to come right back above it. And then we'll see maybe another push to the upside. But this DXY right now, I mean, the fact that it's shot up so much in the past, I mean, this week's been absolutely insane. I said this
I'm wondering if, if you look back at that number, that 105.69 breaking through, I'm wondering if in the coming days, everything going on with the debt ceiling is what pushes us through it. That little dip back down is them coming to an agreement. It's kind of like a scam dip back down. And then like people come to their senses and realize, oh shit, all this $1 trillion of treasuries that they're going to have to sell. The money's got to come from somewhere.
Yep.
And so that's what sends it right back up again. That's to me, just like talking out loud, what makes the most sense.
I mean, I think that makes a ton of sense too. Again, this is just absolutely insane how much this shot up. I've been saying that we need some slight correction just based off the stochastics. Again, this is the daily, overbought in the daily. Let's look at the 4 hourly. 4 hourly, I mean, it couldn't get any more overbought there. Let's look at the hourly. Hourly may be a little bit different. It's coming out from the overbought, but I mean, lower to higher time frames. Obviously, the weekly, there's still plenty of room to the upside, and we can stay overbought for a period of time. Like, look how much we stayed from November all the way till January. So that's 2 months that we stayed oversold. It's very likely we could stay overbought for 2 months, and that could bring us well above 105. We can even test 109 if it gets to a point where risk assets are just absolutely tanking. Doesn't mean it's going to go above 109, but it could be like we test some support. I mean, test this resistance up here, then we kind of consolidate between 105 and 109. It's very possible. Obviously, I think that this is the summer of the dollar. I keep tweeting it out like a jackass, but there's a reason why. I think this summer we're just going to see the strength of the U.S. dollar, despite people, obviously betting against it and thinking that, Chinese yuan and all these other currencies, these Forex currencies were going to be, bringing the dollar down. It was absolute BS. The dollar is going to keep going up. We're going into a recession. We've also saw that I think Germany went into a recession, or they're officially in a recession now. Absolutely insane.
Germany's in a recession. I don't know if you saw the numbers out of Europe yesterday, but it was a bloodbath over there. It was so bad. Inflation came in hotter than expected in the UK, something like 8.4%. They're still struggling mightily over there.
Who else went through this exact
Brazil,
scenario?
I will say, and we talked about this on a previous show about emerging markets, but Brazil came in under their inflation target, and so it looks like they're going to be able to start lowering rates. Like, I still think you and I need to probably do some more diving into the Brazilian market and kind of see, because that seems. Listen, man, we got to look where money never sleeps, baby. We got to figure out where the best places to go are right now. And if that means we got to head down to Brazil, then we're going to head down to fucking Brazil.
I would love it. It'd be absolutely insane if we start to. I mean, again, I'm not insane like good, but if we start seeing a lot of these global markets start to enter some of these recessions, and it's like a terrible financial crisis, but we see some of the markets that played COVID extremely well not be affected by it as much. Obviously, it's going to be affected if with their trade and everything like that. And so, U.S. and other large industries, countries with other, they have huge trade markets with, but it's insane because some countries I think are going to be less hurt by what's coming. And again, if I were to look at any country, I would be looking to like the Pacific, like Asia and all those over there. And I expect the U.S. to be, along with a bunch of other countries here in the West, where they're just going to be absolutely destroyed. And again, that's maybe how they played the post-COVID, or maybe it's just the fact that they didn't print trillions of dollars in 1 year. But yeah, it's really insane because it's like
I'm leaning toward that second one.
The European markets and the U.S. market is absolutely insane how they're struggling so much with inflation, debt, and obviously war is another thing that's leading to a lot of money being sent over. But it's just insane. And then you look into Asia, and it's just like India's kicking ass. China's
kind of struggling. They had some bad data, but they're still doing okay. But yeah, India's doing great. Japan has had a really strong, run up in their indexes. Like they're doing great over there. I still think there's potential in Brazil. Turkey is kind of going through some stuff.
Not Argentina.
Not Argentina. No, not Jesus. Their interest rate was like 97%. Like, are you crazy? What is that even real?
Yeah, I mean, it's been bad. They've had some of the worst economic, their entire history has just been terrible in terms of how high their rates are. But yeah.
Anywho,
the XY right now, bullish in my opinion.
Yep. Let's go to the NASDAQ.
NASDAQ, yeah. This Ponzi, 352 points today. But again, this is the weekly, because we look at the macro, and obviously we see that it's trading in this bear flag, this parallel channel, and it's probably gonna get close to that top range, right? But we're close to 14K, and that was the one that we were talking about. It didn't get above 14 the other day, but this was the catalyst. The fucking Nvidia shooting up that much, just the catalyst to bring people back into tech stocks for the next day. And we can see that it's probably going to test the top of this channel. If it doesn't reach there, then we're probably going to most likely see a breakdown. But again, we're in such a channel that's been playing out for so long, and it's very similar to the Polygon Matic one that we were talking about. Obviously, for 7 months now. This is going to break out, and when it does, it's probably going to be pretty nasty. You're going to find some support maybe on the 200 EMA on the weekly, but you're overbought here, and you have a massive gap between the bottom of this channel and right here. Like, this is probably your strongest level support, and that came in February of 2020, and that's 9,756. And that's if you break this channel, you're obviously going to go down. But you also have to think about the structures that bring us down. So maybe this corrective pattern here is a 5-wave. I'm not looking into it too much because maybe it's on the monthly. This is a 3-wave correction. To me, it seems like it because this was impulsive to the downside here. So this seems like a small correction within here. And we're going to need some major correction. And if it's a 5-wave, there's a good chance it could be impulsive. And that's usually what's going to happen if we're going to go into a recession. But that means we could potentially go down to the COVID lows for the NASDAQ. I'm not trying to be ultra bearish, but it's a very good possibility that if the longer this bubble plays out, and the fact that there's so much money pulled right into the NASDAQ and all these tech stocks right now, Apple's market cap, now Nvidia's market cap, I wouldn't be surprised if this is an absolute bloodbath and the NASDAQ is just like the ruler of losers going into the major indices that fall when we enter like Q3, Q4.
Okay. I don't know if I agree on the COVID lows, whatever. I want to talk about Nvidia for a hot second here. I want to start off by go ahead and remove your screen share, because I'm going to screen share for a second. No, because I want to see your live reaction. I already have it pulled up. I want to see your instant reaction.
All right, let's do it.
But first off, I saw a thing today. Kramer, back when Nvidia was like in 2021, when Nvidia was like 300 a share, he was talking about how it was going to a 10 billion market cap. Then last September, when it went down to 100 a share, he said to start shorting it. And now here we are today at 384 a share. And on the weekly, have you seen the weekly for Nvidia yet today, Kevin?
Yes, but I'll say no for the show.
What is that?
That's bullshit.
I mean, would you look at that? Look at that candle. I mean, my God, that is just
I'm not surprised.
That is a 1 week candle, and it is just.
I hate to say it, but that's almost a daily candle. That's almost a daily candle. That's it's insane.
Yeah.
I mean, it fucking shot up just 70-something bucks today. Wild. Whose money is this?
I have no idea. Who is I mean, people are jumping back in, man. Like,
I saw 396 was the height of it, and then it's still at 384. At some point today, I was expecting it to be like 350. I'm like, no, the fuckers keep buying it. It was at 381, and that's 384 now. Is what it is, obviously. I thought we were gonna get a double top. Worse, we got an all-time high.
We got an all-time high in a big way. Previous all-time high was 331, and here we are at 384.
Man, I love this game. I can't imagine. Could you imagine buying Nvidia here? Again, not financial advice at all. But could you imagine buying Nvidia here and then being
Barclays raised their price target to 500. Like,
they're working for Barclays now?
Apparently, but Barclays, is still if you listen to Barclays, it's still a buy. I'm not going to tell anyone to buy anything, especially not buying on the day when there's a 26.
Out of it.
especially on a day where it's up almost 26%. I'm not going to tell anyone to buy on those days.
And that's a dangerous thing too. Like right here, this could possibly go up a little bit more because people are like, this is bullshit. I got to short it. And it could just be a little bit more of a squeeze. And that's the dangerous part about this market with singular stocks, because if I'm going to be looking at this, it's like, yeah, I want to short the shit out of it. But the problem is, if I do that, someone else with a lot more money knows that. And look, how did this shoot up 70 something dollars today? Someone with a lot of money dropped a shit ton.
Dude, Ace, you are spot on. And that led to my next point because we're about to wrap up the show. I think we're kind of done looking at charts, but I'm seeing CNBC, I'm seeing Bloomberg with these articles talking about how people are rethinking things. And I keep seeing literally the FOMO trade. And never in my entire, almost 2 decades in the stock market have I ever thought it was. And I mean, granted, like I was young for part of that stuff, but give me credit for 12, 13 years. Never in that time have I thought to myself, it's a good idea to buy in on FOMO, right? Like if that is the rationale that people are using, is that people are going to pile in due to FOMO, and that's why you should buy now. I don't know if that's a good idea, especially if you're not a trader, if you're not looking to take, 10, 15% gains, 5% gains even. Like if the rationale to buy in now is that you think people are going to FOMO in, I don't know, man. I would prefer some solid fundamental or technical reasons to start putting money in as opposed to the hope of FOMO.
I'm going to tell you something right now because you gave me a really good memory. Remember Meta, how big Meta was? Like everyone was like, I got to buy these metaverse coins, right? That was September, October-ish of 2021. Yeah. And what happened after that? We started seeing the top of a market, right?
Yeah.
Like January. Is AI any different? Came in the corrective bottom of a move to the downside. And look how much everyone's talking about AI. Look how much Nvidia shot up. Are we not at the corrective move at the top of that move? It's very possible. These things that they get people to buy into the market and they believe that this is the future. It's like, it might be the future, just not now. You know what I mean? And it's because people are short-sighted. And like I said, if you're buying Nvidia at the top, I mean, not financial advice, but it's like, you're going to be waiting a long fucking time for money to be coming in, because this thing, I'm going to pull up Nvidia one last time because this just aggravated me looking at this. But when I looked at Nvidia this morning, because obviously I didn't know it shot up that much. I was working all day yesterday, but here we go. Share screen. Look at this weekly stochastic RSI. Like this is at 198 for the two indicators down here. That's on the weekly. Let's go to the daily. Daily, it's going to be overbought today, clearly. Like, obviously, it fucking shot up 25% of its entire market cap. And then let's go to the monthly. Monthly, overbought completely. So this is dangerous. This, we could potentially say that this is a bull market for Nvidia, sure. But what comes after a bull market? Obviously, a bear market. So if we're pushing to the upside now, there's a good chance that this thing's going to be absolutely moving to the downside. And you might get a little bit of pump to the upside, but that's going to be corrected before it continues to the downside. So, yeah, obviously we hit an all-time high today. But, again, I look at Meta because people were buying into Meta based on FOMO. Like, we saw how much Mana and Sandbox, and, I mean, they might be doing good things in the future, but they're not doing anything right now. AI, everyone's buying all these stocks. It's like, okay, they might be doing well right now, and in the future they're going to be extremely profitable, but what about the next 6 months? That's what you have to ask yourself. And if you're willing to hold something that you're buying at 382 right now into, I don't know, 2050, maybe it's a good trade. I don't personally think so. I think that having cash on hand and the DXY going up while Nvidia is going up, one of those is going down pretty soon. And I think it's better to be holding one more than the other. But again, that's just me speaking. But I think that we are seeing this come in at the right time for people to buy in. And maybe dumb retail is buying, listening to CNBC, and you're getting the people saying, this is the time to buy. The fact that sentiment's all around, I don't know, man. That's extremely dangerous. I think it's just in the best interest of some of these institutions to trick people into putting in some more cash, because, damn, if their short positions aren't loaded up by tomorrow night, then they're fucking stupid. I'm sorry.
Yeah, I guess the last thing I'll say on Nvidia, if you scroll down on TradingView, I don't know if you ever look at these, but they have like the technical rating and the analyst rating, and they're both on a strong buy right now, which I think is just absolutely wild.
There it is, strong buy right in the corner. Oh man, analyst and technicals. That is, how could the technicals say strong buy? Bullshit, man. TradingView must have a fat short position too.
What are Nvidia owns TradingView? I don't know. What technicals are they looking at to say it's a strong buy? And I mean, yeah, and Ace is right. The Hong Kong hype is starting to really take off. There's been talk like on the news over there about the fact that they'll be able to start trading crypto beginning June 1st. So that could cause a little bit of a pump too coming out of any debt ceiling deal for crypto.
I don't buy it.
Keep in mind there.
I don't buy that at all. I think that they're a lot smarter than us. And the fact that they're gonna, I mean, crypto is so driven by the U.S. economy because obviously we're one of the nations that are really open to it. And we see how China's been very restricted towards crypto, right? And again, maybe we can say Hong Kong's different, but at the end of the day, it's still part of China. We know that their overreach is pretty strong being a communist nation, just how it is, right? I'm not complaining about it. But they're smart enough not to, I mean, they're hopefully they're smart enough to look at what's going on in the U.S. We're going to see that debt ceiling, be a huge issue, whether it's the credit rating that brings us down or not. Something's going to bring us down. It's inevitable, in my opinion. Not financial advice, but I don't think they're going to buy the top. If they have futures trading, I think they're just loading up on shorts right now, and they're just betting against the U.S. I think a lot of people are betting against the U.S. Even some Americans are probably betting against the U.S. market and economy. So, yeah, I don't see this being anything other than just like, hey, stupid, buying.
All right. I think that's very well said, and that's how we're going to end today's show. So thank you, everybody, for being here. Ace, Randy, appreciate you participating, jumping in the comments. Anyone else who watched, appreciate you as well. We'll be back tomorrow. We're going to wrap up the week. Got to figure out what time we're going to be broadcasting or if it's going to be recorded one, but we will have content out tomorrow. So please, lastly, once again, do us a favor. Down below, we got some buttons that we would appreciate you hitting. The like, the subscribe, leaving a comment, sharing us out on social media. That last one is the biggest one. Want to get in from as many people as possible. Try to provide as much straightforward, unbiased insight as we can. So we'll be back. Appreciate everybody. Have a great day, and we will see you next time.
Take care, everyone.